Okay, so we're at the end of the month, of course. We've already made 3 adjustments that are required because we had some accounts that, after taking physical inventories, we had to bring their balances to a current, accurate amount. And so that was the purpose for these 3 adjustments for office supplies, store supplies, and prepaid insurance. So let's talk about 2 more adjustments that are covered in Lesson 15.2. And the first one of those is going to involve an adjustment to merchandise inventory. Okay? I want you to turn in your workbook, just flip back 1 page and tell me what the merchandise inventory balance is according to our ledger. Can somebody read that off for me? Grace? 94,845. You don't have to write this down. I'm going to just do a little figuring. 94,845. 45. 31. Okay, so let's think about what merchandise inventory is. These are items, we're a retail business. This is the value of items that we sell. And obviously, we've got this much sitting in our stock room that hasn't been sold yet. This number throughout the month changes as far as how much we have on hand because we're constantly selling items. So we're constantly going into the back room and pulling items out to sell, or we're adding to those in the form of purchases, and that's taking place all month long. We're selling, we're adding. We're selling, we're adding, and that's pretty much day-to-day business for a whole month. Well, you got to keep in mind that this really was the brought forward amount from the previous month. We really haven't done anything to this throughout the month. When we add items, we debit purchases. When we sell items, we credit sales. So that activity that's happening all throughout the month hasn't affected this account called merchandise inventory. It's still where it was from the previous month at the end. So we've got to we've got to do an adjustment to reflect all of the activity that actually happened during the month in the form of purchases, that's adding, and sales, that's subtracting from our inventory. So the book tells us on page 449, we did a physical count, and the December 31st balance that we came up with after going into the stock room and counting, do you see where it's $96,471.25 according to your textbook? Does everybody see that? I'm on the work together, and it's point number 1 on page 449. Okay, everybody with me? Just want to make sure you see where that number came from. We're good? Everybody? Okay, well, how do I do an adjustment? According to the ledger, this is merchandise inventory, but it's off a little bit. It needs to be raised to $96,471.25 to make it accurate. So what kind of an account is merchandise inventory? Asset, liability, owner's equity?
Asset.
It's an asset. How do I increase any asset? A debit. So my adjustment here is going to be to merchandise inventory. That's going to increase it. And how much does this adjustment need to be in order to take my current incorrect balance and make it $96,471.25? So, Blake, do you have that number?
Is it $1,625.94?
Okay, everybody agree? So we've got that number. The old balance, which is not accurate, it's out of date. According to our count, it should be 96,000 plus, and the difference is going to be our debit to merchandise inventory to bring it up to what we say we have in our stock room. All right, so the credit's going to be to a new account. Well, we've not seen it for a while. We looked at it when we were doing adjustments and closing entries way back when we were doing service-oriented businesses. The credit is going to be to this account called income summary. And this is always going to be true whenever you have to make this adjustment to merchandise inventory, and it's the same amount. And I'm going to erase this. This is not really needed. I'm just doing a little scratch work. Okay, so any questions? Now, what if it turned out that when we did our physical count, it was actually less than what the ledger was showing? In other words, we needed to lower it to make it accurate. What would our journal entry look like now?
Would you credit merchandise?
Yeah, we would just flip this. We would debit income summary and we would credit merchandise inventory if it needed to be lowered to make it correct. All right? So that's adjustment number one that lesson 15.2 talks about. Now let's do adjustment number 2. All right, so if you want to read along with me so you'll understand where this information is coming from. Instruction number 2 under Work Together 15.2 says a single note receivable is outstanding on December the 31st. Okay? Remember, notes receivable incur interest. We're going to get interest from that customer that gave us their promissory note. The 90-day 8% note was signed on November the 22nd. We've got to journalize the adjusting entry for what we call in accounting. This is called accrued interest. Okay? It's not that they're going to pay us that interest on December the 31st, but we need to show how much is due to us as of December the 31st. This is another illustration of the matching principle. We match revenue for a period in that accounting period in which it actually took place. So what we need to figure out in order to determine interest, first of all, how many days is that? From November the 22nd through the end of the year, which is December the 31st. So how many days would that be? Obviously, it's 31 days in this month, December, plus another how many days? How many days would it be from the 22nd? How many days are in November?
30.
Okay, so we're talking about through the end of November, that's 8 days, plus another 31 days. So how many days are we talking about? 39 days, okay? So remember the interest, the way we determine interest. We start with the value of the note, which we're told, well, we don't know from the textbook, but we can get it from the ledger. So what's the notes receivable balance? What is the value of notes receivable on our unadjusted trial balance? 8,000, okay? So we have this note valued at $8,000, and what's the interest rate according to the textbook? It's 8%.
Where was that $8,000
From the unadjusted trial balance, the notes receivable account. And that came from the ledger. See it?
Yes.
Okay, so for how many days did we say? We counted up 39 days. So we're going to do 8,000 times 8% rate, and we're going to multiply that by 39 over 360 to get the actual number, the actual amount of interest that would have accrued from November the 22nd to the end of the year. And tell me what you got. Do I have a number?
$69.33.
You nailed it. $69.33. I just want to stop and make sure you were able to get that. Okay? So now let's make the journal entry. We know how the number is arrived at, and we can go ahead and write in that number as debit and credit. and then we'll talk about the accounts. So I know I'm gonna be debiting some account for 6933, and I'm crediting some account for that same number. We know how we got that number. So what do you think we would debit for interest that's not being paid now, but it is due to us in the future?
Accrued interest.
That's a good guess. What would we do if it were some account? They bought merchandise on account, what would we debit? What'd you say? In accounts receivable, right? That's typically what we do when we sell and they didn't pay us immediately, they're gonna pay us sometime in the future, we debit accounts receivable. So now that it's interest, what do you think we're gonna debit?
Possibly interest receivable.
Interest receivable, good call. Okay, anybody want to give me a guess on what the credit will be? Well, I'll give you a hint. It's an other income account. It's not typical revenue because we're not in the business of, we're not a bank.
Interest
We don't make
income?
money off of other people's money. Yeah, this is interest income. And those are the only two journal entries that are discussed in 15.2. So tomorrow, we'll just come back to this and we'll tack on more adjustments that are talked about in 15.3. Have you posted these yet? We all done all the posting?
I think so.
Okay, so you should have account numbers here if you've posted to verify that you've actually done the posting. All right, any questions on 15.2? So what I'm gonna have you do is on your own, and we need to, before we leave, well, hopefully before we leave, I wanna do application 15.1 and 15.2. So that's what we have to do. Do this 15.2 on your own, and then go to the application at the end of the chapter, and let's do 15.1 and 2.
Can you leave that up?
Yep.